Welcome to episode 1 of series 4 of our OR Talks podcast. Today I'll be discussing the spring statement and things to consider for the new tax year. Here are your hosts, Neil Seeger
and Marc Jovanovic.
So, thanks for joining us. First one this year.
Yeah, it's great to be back.
It is good to be back. Although we're going to be talking about the spring budget, or spring statement, not budget. Sorry, almost shot me down there.
We are, and it's going to be a really quick one on that topic. Nothing actually changed. It affects the taxes that we already knew about, so...
That's good news.
It is. There were other announcements in there a bit out of our remit to do with government spending and things, but...
Yeah, we're not getting involved in politics.
That's outside of our domain.
We're here to state facts.
Yeah, state facts and how it will affect you as a business, but from a tax point of view, nothing new was announced. It was all what we already knew from the autumn budget.
Yeah, from the autumn one, yeah.
Which is good in a way that it means you haven't got to think about anything new, but there are probably things in the autumn budget you were hoping would get thrown out, but...
Well, there definitely was from my side. There definitely was from my side and the clients that I've been talking to, but unfortunately, no good.
Status quo, yeah, it is what it is. So we'll have a little bit of a look over those things, but yeah, nothing new to come up really from a tax point of view.
So from a new tax year, with the new tax year is literally just around the corner. So what's coming in from the tax year 25-26?
25-26, I can't believe we're in that year
already. I know, that's why I said it a little bit like, oh, that sounds scary, that does.
So all your personal allowances and basic rate bands, they're all remaining the same, so there's no changes on that sort of front. All your tax rates, 20%, 40%, 45% for your non-savings. Yeah, all frozen. And I think it's set to stay that way until 2028 at the moment.
Yes, that's what I believe, yeah.
So on that front, nothing's really changed again.
Yeah.
National insurance, we have got a few changes, haven't we?
Oh, yeah. So it's mainly your employment national insurance.
Yeah.
So that is effectively you have employees.
Yeah.
Or if you're a company director and paying yourself a salary of, let's make up a number, anything more than 12,500, isn't it?
Yeah, that's it, yeah.
So that'll kick in. So the headline one that everybody saw, and the one that I saw when the autumn budget happened, was employers' national insurance is going up to 15%.
Yeah. From
13.8 to 15%.
That's it, yeah. So that's a big increase without paying anyone any more money. You've got to pay more NI on what you're already paying them. So
that's it. Employing no other people. So everybody has cost more money.
Yeah.
With no more pay rises. That's great news.
Yeah. There was the employment allowance as well, there wasn't that has been brought in. So previously, if your NI bill went over £100,000, you couldn't get it anymore. But that threshold's been removed, so you can claim it still, even if you've got a large wage bill.
So that's if my employer's national insurance, just by itself, was £100,000 or more, I would lose my
allowance for that. Yeah.
Okay, so what was £5,000?
Yes, that's it. Yeah. Okay. So whereas over £100,000 you couldn't have it, now you can. So it's a little bit of good news.
Well, that's good news. If I've got a big payroll.
It is, yeah. But if you've got a big payroll, the increase in NI is probably more than what the allowance is. So you're still losing out, but not as much as potentially what you could have been.
Well, that's from the employer's point of view. So then have they also? I remember is the allowance has also increased.
Yeah, that's it. So it's gone from 5 to 10, is it?
It's 10,000. Yeah. So that's gone up. So you got more of an allowance, which is good, and you get to keep it if you go over 100,000.
Yeah.
So that's good news. But if I'm an employee, do I start paying my employer's national insurance? So do they start paying it earlier?
So when you're saying the employer, it's my personal contribution.
I meant from the employer's point of view. Sorry, not the employees. Sorry, I'm getting confused. But with the employer's point of view, right? So I pay 15%, but that 15% isn't on all of their salary, is it?
No, it isn't. Yeah, so it's at 9,100. That's when you start paying anything over that amount. So the first 9,100 of what you pay someone, you don't pay your employer's NI on it.
Right.
Over that is when you start paying it.
Perfect. And has that been frozen, or is that always been the way?
I believe it's frozen until 2028, and then it's set to go up with inflation potentially. So
perfect. So the only thing that's changed on that is my rate's gone up.
Yeah.
And I end up basically getting a bigger allowance as an employer.
That's it. Yeah.
That's not too bad, then, is it?
No, so that's the biggest change really from sort of the employer-employees sort of thing.
Has a horrible thing like national minimum wage gone up?
It has indeed.
Okay,
Yeah.
right. Well, it's a horrible thing. I mean, it depends when you look at it, I suppose. From an employer's point of view, you have to pay your staff more.
Yeah. It's pushing up the basic wage, basically, isn't it? It's closing that gap. So the national minimum wage, it's a funny one because it depends on your age and everything as well, doesn't it? So
have all three changed?
So the threshold for them all have changed. So apprentices, they're starting now from the 1st of April 25 at £7.55. That's for 16 to 17 year olds. 18 to 20 year olds, £10, and then over that, 21 and over, £12.21. So that's in line with the national living wage then. So
so they've aligned it.
Yeah.
So that's all gone up. So that's something that if you know from the 6th of that comes in from the 6th of April, the 1st of April.
6th of April 25. Yeah.
So 6th of April, if you've got any of these any employees really, it's always best to check because you'll get caught up and pay too little.
It's a dangerous thing to get caught by underpaying that. So yeah.
It's always a good thing to check. I had somebody a couple of weeks ago, and they had somebody, and let's say they had somebody £1,000 a week. That might need to change based on the number of hours.
Yeah.
Because when you divide the amount per week divided by the hours they work, they might be below minimum wage, and that's what catches some people out.
It definitely does. Yeah. I think that's it on that sort of employment side.
Is there
anything else you can think of on that?
Not that's changed. No, it's all very, very similar or same here, I suppose. It
is, yeah. Back to employing really. If you're providing company cars, if you're providing double cab pickups, there's a change in that to be aware of.
Good thinking.
So previously, double cab pickups were always treated as a van, which is great news because they have a really low benefit in kind value. So they're around the £3,000 marks roughly. That would be what you'd be paying tax on. It's been changed and it's been phased in. So the way that's sort of working is going forwards they're going to be treated as cars.
Okay.
So which means how the benefit in kind's worked out is on the list price of the vehicle at a set percentage depending on the emissions.
It's the emissions that they get you, isn't it?
Yeah, in double cab pickups, I'm sure you know the emissions are quite high.
Quite high, yeah, big vehicles, to be fair.
Which leads into a higher benefit in kind charge on them.
Yeah. That's only double cab though, isn't it?
That's double cab pickups, yeah.
So single cab pickups.
Single cabs at the moment still fine to be treated as vans and have the lower. So yeah, that's something to be aware of. So if you're looking at buying one, make sure you get in touch and look at how that's going to affect you going forwards.
And then from the company point of view, if they're classifying them from a company car point of view as cars, from a company's claiming, so I go and buy a double cab pickup that historically was classified as a van.
Yeah.
So I used to, in my company, I used to claim all the way back.
Yeah.
And I used to claim 100% tax allowance on that vehicle.
Yeah.
Has that changed?
I believe at the moment the VAT is still the same. It's all very much on the payload of the vehicle.
Right.
So over a tonne, it's still okay with claiming the VAT back. And I'd imagine that they've gone down this road with the benefit in kind. It'll be something they're looking at changing as well to treat them more as vans.
Capital gains, but it hasn't not capital gains, capital allowances.
Capital allowances, yeah.
That hasn't come in as yet.
Not as far as
I know they've put it in the documents that were thinking about it, but I don't think they've considered it yet.
No, but it's something to be aware of. Just get in touch if you're looking at buying any vehicle really you should do to see what the tax consequences are going to be.
That's why you contact us on a case-by-case basis, isn't it?
Yeah, so you can forward plan.
Absolutely. Oh, yeah, get it in there. First one of the year, we've got to get all these in.
Nice and early, that's it.
So that's the only things from company cars and employees' point of view. Obviously, I think we mentioned it before, but the other key thing that came, and they made some really big changes on inheritance tax, didn't they?
They did,
in the autumn budget.
Yeah, so your business property relief, and I'm sure everyone's heard the agricultural property relief because all the farmers have been up in arms.
On the news.
Yeah, whereas previously they'd get 100% relief on the agricultural value. Yeah. It's now been restricted to 100% relief on the first £1 million.
So that's if I've got a farm, and let's just say back my farm was worth £10 million. Yeah. Big farm. And so back historically, that would be outside of inheritance tax effectively, in simple terms.
Relieved, yeah.
Yeah, I mean, I don't use technical terms. And then now, so my farm of 10 million, I'd have a relief of $1 million, and the remaining 9 would be subject to inheritance tax.
It would be, yeah. So
wow, I can see why they were complaining on the news.
It's a big change on that, yeah.
Yeah.
The problem that people have with that is they haven't actually got the cash to pay that. The only way to generate that would be to sell part of the
land.
Farm. Exactly, which is why it's quite an emotive situation.
Yeah, interesting, isn't it?
But nothing changed in the spring statement on that. It still is as it was announced in the autumn. So,
wow, that's a big one, isn't it?
Yeah, but the key thing with inheritance tax planning is to plan.
So you can get around it, potentially.
Not necessarily get around it, but you can plan for it. There's things you can do during your lifetime. So it's one of those things where there's no point ignoring it and panicking. Look at it now. Look at what your future plans would be if the worst was to happen to you in the next 10 years. What would you want to happen? And then you can plan for it all.
And you can plan for it alongside your will and all those sort of those things as well.
Yeah, and that's not just farmers, that's absolutely anybody. Yeah. Everybody should have a will, shouldn't they?
They should have a will, 100%. Yeah, I mean, I was talking to a client this morning about the benefits of a will. So he has, I don't know why I'm telling you this, but he's got a limited company, which is worth a couple of million. He's also got rental properties.
Yeah.
He's got 3 kids, not married. So that, without a will, can be quite a difficult position to be in. But obviously, will's professionals, and it goes in hand with your tax plan, doesn't it?
It does, yeah. And when you're having a will prepared, that's when you should be doing your inheritance tax planning alongside it.
Absolutely.
So you might be happy with how much tax you've got to pay because you're getting what you want to happen with your estate.
Yeah.
Likewise, if there's an opportunity to still get what you want, but do it in a slightly different way. And
not have your family left with the tax bill having to sell it anyway. Then
exactly.
Then absolutely, yeah. Worth planning. Well, that's a cheery note that I've just wandered down, isn't it, mate?
It is, yeah. The other thing that's sort of looking backwards a little bit in a way, in the autumn statement they changed the capital gains tax rates, didn't they?
They did indeed.
Whereas before residential property was 18 and 24%, and other gains were 10 and 20%.
Yeah.
It's now all 18 and 24%.
That's just simple. Everyone pays the same rate no matter what you've sold.
It does, yeah. So it was expected in the autumn statement that the rates for residential capital gains would go up, but it hasn't. Touch wood, that didn't change in spring, so that's good.
So that is good. That is really good.
It's bad that it's gone up for other things, but it hasn't gone up above what the residential rates were. So.
Anything else? I can't think of anything else that changed.
So business asset disposal relief as well. The rates for that are slowly going up. So that's where you're selling at qualifying trading. So shares in your own personal company.
Yeah.
If you're selling those and it's a trading company. Previously you had £1 million lifetime allowance where the gain on that could be taxed at 10%.
Yeah.
They're slowly creeping that up, so it's going to go up to 14%.
14%. This new tax from the 6th of April.
That's it, yeah. And then they're going to bring it up so it's in line with the lower rate of CGT of 18%.
Yeah.
So that's slowly creeping up, so that's something to be mindful of. If you have got plans in the next couple of years to sell your trading company or other business assets,
then it's worth considering what rate you're going to pay at. I was having that meeting with somebody a couple of days ago, looking at the going forward and timing of when they sell and holding companies, whether it's worth putting those in place or not. So, but then there are ways to plan around that as well.
Exactly, yeah. So it's all these things to bear in mind, really.
Absolutely, but it's all a case by case basis, isn't it? What works for one client won't work for another.
Exactly.
So
everyone's wants and needs are different as well, aren't they? So.
Absolutely. So case by case basis.
Perfect. The other sort of changes that are coming up, making tax digital for income tax.
That's a big one.
It's all over the radio and it's now all over this podcast as well.
Oh, absolutely. Well, it is, yeah. It is.
So we haven't really touched on it that much in earlier podcasts. So
no.
Basically what this means is for sole traders and landlords with income, so that's not your profit, that's your income.
So your turnover.
Yeah, turnover, income, yeah. Over £50,000 in the tax year 24 to 25, from April 26, you're going to have to report every quarter what your income and expenses were for that quarter.
Right. Okay.
Follow that?
So if your income in the current tax year, well, the one that we're just finishing actually, is to March 20 or 5th of April 2025.
Yeah.
If your turnover is £50,000 or more, then you have to report your numbers quarterly from
6th of April 26. Yeah,
wow.
That's when it starts. So. And then that £50,000 threshold, that's gradually been brought down. So from 6th of April 27, it'll be if you're over 30,000. From 28, it's going down to 20,000. And then from there, we don't know, but you can probably expect it'll go down to...
Everyone will be in it then by that point.
At least the personal allowance, you'd have thought.
Yeah. Wow, that's so then from a tax point of view, at the moment, I pay my tax in January and July if I'm in payment on account. And if I'm not in payment on account, then I'll just pay it by the end of January. So my tax year is the 5th of April 2025, I'd pay by the 31st of January 2026.
Yeah.
Is that changing?
Not at the moment. So you're still going to pay your tax at the same time. All you've got to do is report your income and your expenses. Any tax adjustments that we do to get from your accounting profit to your taxable profit that we've spoke about loads of times, they're not done on the quarterly submissions. They're done at the end of the year.
It's purely just your income and your expenses.
Yeah.
Okay.
Whether in the future, looking into your crystal ball, 5 to 10 years time, whether they'll then start getting you to pay on a quarterly basis, who knows?
I don't know. I'll ask Mystic Neil. So Mystic Neil thinks about that.
But at the moment you don't. You still pay your tax in the same way as you have been. It's just a reporting thing, basically.
Right. Okay. So that's good news. I don't have to pay my tax any earlier, but it's another thing that I've got to do.
It is another factor you've got to put in when you're running a business now, or even renting properties. That's going to catch people as well. So something to be aware of. And if you have any doubts on it at all, just get in touch.
Yeah, absolutely. We're here to help and support with all of this, aren't we?
Yeah. And the other change from April 26, so we're looking ahead again here, is your benefit in kind reporting.
Yeah, your P11Ds.
That's it. So currently,
I was about to say. So currently, you'll finish your tax year 5th of April 2025. Let's just say.
Keep it simple, yeah.
I have to. So my employer would have to file a P11D form by the end of July.
By the 7th of July.
7th of July.
Sorry.
6th of July. Right. Okay. So you have to. They have to file that to report whatever. So if I've had private healthcare, if I've had a company car, has to be filed to HMRC to show what the
taxable benefit is.
Correct.
Yeah. So that's added to your salary basically. What you're taxable on.
So that's changing. So what's changing?
So that's now going to have to be reported alongside your payroll from the 6th of April 2026. So you won't complete an annual form P11D, apart from in very limited circumstances, for 2 real types of benefits, which are accommodation and beneficial loans. But everything else is going to be reported every month with your payroll alongside that.
So I just basically pay it every month.
Yeah, that's it. It'll be collected that way.
So if I get a company car in September next year, then effectively I'd start paying. I'd adjust my payroll for that from October all the way through. So, but actually, that actually helps people then, doesn't it? Because people they've had the company car for the whole of the tax year. Gets reported in July, on the 4th of July, which means they owe tax that they're not aware they owe tax from before, because they haven't told HMRC they've got a company car to have their adjustment on their tax code. So that will help, actually.
It will help. It's just an added monthly requirement for when you're processing the payroll, basically.
Just something to consider, isn't it? For always let the payroll person know that your employees have got company vehicles or whatever.
And if you're really keen and you wanted to start doing it sooner, you can voluntarily do it now, but it's going to be mandatory from the 6th of April 26. So
get yourself in the process, I suppose. Get yourself used to it.
Tidy that. So.
That is an interesting point, that is, Mark.
Yeah, that's good. Glad you're finding it interesting.
It's very useful as well. Very, very useful. Are the things that are going to change. Is there anything else that's going to change in the future? Well, obviously you don't know. That's actually going to happen. Mystic Marc. Mystic Neil hasn't got a clue, so Mystic Marc might.
They're the really big things, I think, that people need to be aware of and start planning for.
Yeah.
Is there anything else coming up that you've come across?
Nothing that I've come across. Obviously, the VAT on the schools. I think that's already in. That's happened. That was a big change. Nothing else has changed really. I'm aware of.
No, not from the spring statement certainly. Anyway,
no, definitely not on the spring statement.
And we covered everything in the autumn one in more detail after that autumn budget.
So for the time being, I don't think there's much to report.
No, nice brief one, and
We'll have to thank everyone for listening, I suppose. So, thank you.
Yeah, thanks everyone for joining us. And if you've got anything you'd like us to cover on a podcast, please drop us a WhatsApp on
01905 777 600.
Until next time, thanks for listening.
Thank you.